All right, class is in session, guys. Here we go. He says GameStop, the stock, seems like it's going to tank after earnings. It's a struggling business, especially with losing over a quarter of their stores. It's down 20% year to date. So are you talking about stock price or are you talking about the company itself? Because you say it's a struggling company, business, whatever. That's not true. It's not struggling at all. They have $9 billion cash and they make a lot of money, unlike other companies in America. They don't have any corporate debt. Like they don't borrow money with covenants. Okay, just so that we're clear. And they have no bonds due, convertible notes due, unless they convert at a 30% clip, and it's all 0% interest on the money that they have. Additionally, nothing's due for 5 years. So 5 to 7 on both two bonds, convertible notes. So what are you talking about? I'm trying to find out what you're talking about. This is tough for me, but I'm going to help you on something. Okay, I'm going to show you something. Hi, good morning. I'm here in the screen. But this is going to be GameStop, right? So there's a flagpole. There's going to be resistance here on the downside. There's going to be support. We found the bottom here. And that's going to be called capitulation. That's the breakout. You break out a flagpole, okay? Not nearly the size of the real flagpole, but you break out. You then have resistance off the top. You have your support. And now we have capitulation. We have the breakout. That's what's coming, right? And a couple things that give it away if you're not clear. Right here, if we get really close, right, there's going to be what they call a golden cross. The 200-day moving average and the 50-day moving average, the short, boom, breaks out. Now this right here, these are logarithmic charts. These are not linear charts, just to be clear, okay? Now you see the formation. I want you to recognize it. Flagpole, resistance, support, breakout. Flagpole, resistance, support, breakout. This is how it happens. It's stair-stepping, we got you. But just so that we're clear, so you know what that means, bullish pennant chart pattern. Flagpole, resistance, support, breakout. It's normal, okay? Well, it's elementary. But this is what I want people to focus on, okay? This is going to be price to book ratio. A lot of people tell me that I'm wrong on this theory, and I'm just going to prove it to you right now. So, .com, right? We broke out a .com bubble, greater financial crisis right in here. Look at the valuation given to stocks back then. Right here you see a 5.71 times book. That was a peak for GameStop at the time. Comes down, right? As we go through, we saw craziness. January, everybody's saying, okay, so 51 times book, maybe I shouldn't buy GameStop here. But watch this. As it comes down, we're at a 7. We're at a 4. We're at a 5. We're at a 3. We're at a 3.2. We're at a 2. Right now, we're at a 202 times book. That's the problem. So if you saw the chart I showed you, we're talking about book value versus the current stock price. There was one time where it went down to a 2.0 in the last 5 years. The stock doubled in value, went all the way from $10 all the way to $80. Came back down to 22 today. But we're at that 2x right now. So when we're 2x flat, we have earnings in front of us in 2 days, you have a big problem, Wall Street. This stock's about to rip. It's not going down. And if it were to dip, just so that we're very clear, the world's buying. The whole world would buy it at this price. So you'll see.